YouTube, what is going on, guys? It's giveaway time. All right. Now, um, let me see. I gotta get to posting all of this, like for you guys to obviously join up and everything. But what's good, guys? What is going on? Hopefully, you guys have been having a beautiful weekend, because I have. I've been taking it pretty chill. So, so yeah. Anyways, here, let me go ahead and put out that I'm live over here on YouTube. Give me 1 second just to get everything set up here. What's good, guys? What's good, everyone tuning in? What's up? What's up? What's up? All right, let me go ahead and put out that I'm live. 1 sec. What's good? What's good? What's good? All right, let me see. How do we get? I mean, bro, I just started. I just started the stream, so give me 1 second, obviously, to put it all out and everything, and then we'll start. I'll just wait for everyone to join up and everything. All right, but in the meantime, for the people tuning in and everything, first and foremost, welcome. Hopefully, you guys are having a beautiful weekend. Okay, so the way I'm gonna be doing this stream, it's mainly. Let me put this away. It's mainly the way I'm gonna be doing it is we're gonna be doing two quizzes. All right, because I know some people in here, you guys might be new to trading or might be new to understanding the strategy and all that stuff. All right, and there's also that group of people that have been with me for a few months or studying and everything, for some time, to the point where you guys are capable of understanding, pretty much every condition in the market using our strategy. All right, so I'm gonna be testing both of you guys. All right, now we're gonna be starting with the first quiz. I'm not gonna be putting too much time into it. Obviously, I'm sure most, if not all of you guys, kind of understand everything, all of the questions I'm gonna be putting in the first quiz. But we're gonna be reviewing it just a little bit. All right. Now for the other one, I know a lot of you guys are going to be kind of thinking about it. All right. I made sure to make it a little bit tricky. All right. So for the first quiz, which I'm about to put the link right now, we'll have about 19 questions. All right. Like I said, we're not going to spend too much time on the first one because, I mean, I'm sure all of you guys understand it. Do we answer it on here? No, I'm going to send you guys a website. All right. Um, so for the first quiz, for the top three people, all right, top three people that pretty much, get to the top of the leaderboard, I'm going to be giving each and every single one of you guys, for the top three people, one funded account. All right, for free. You send me your Cash App, your Zelle, your PayPal, whatever, and I'll send you the entire thing for the checkout. All right, so you guys can buy the accounts. Now, for the second quiz, which will be the trickier one, obviously it's going to be a lot more challenging, so I'm going to be rewarding you guys a little bit more. All right, so instead of giving out one account for three people, I'm going to be giving out two accounts for three people, for the top three people on the leaderboard. All right, so remember, once again, all right, no, I'm going to be giving out Apex. Where right now with the 80% off with Apex, it's about $34. So I'll just send you guys that amount, and then you guys just go buy the account. Or if you guys want to go buy food or fill up your gas tank or whatever, you can also do that. All right. But once again, we're gonna be starting with the first quiz. Remember, top three people. It's gonna be based off how fast you answer it, and of course, if you answer it correctly. All right. So yeah, let me go ahead and get to posting the link real quick. So it'll be right here. All right. I'm gonna go ahead and send the link over here, in the chat, just like that. All right. I'm gonna pin it real quick. So once again, if you guys do want to tune in and join into the stream. Oh, by the way, before you guys put your name, but wait. Put your Discord name. All right. Before you guys join, put your Discord name, because it's the way I'm gonna have to contact you. All right. So with you guys joining in, don't put your name. All right. Put your Discord name. If you put your regular name, just leave and come back with your actual Discord name. All right, because if not, I won't be able to find you guys and I won't be able to contact you guys. All right. So once again, if you guys did join without your Discord, just leave it and then join back with your Discord name, and so I can contact you and ask for your information just in case you get top three. All right. So yeah, just like this, I know Liho, he's in my Discord. NQ Pink, I know she's in my Discord. P Diddy's in taking them. Okay. All right. So P Diddy's in here. Tyden, I know he's in my Discord. So once again, guys, make sure you guys are putting your Discord username. If not, just leave and join back, and then just use your Discord username. All right. Once again, if you guys can't do this simple thing, then obviously I can't really send you guys the money. All right, guys. But yeah, I'm gonna give it, maybe like what, 3 to 5 minutes for you guys to join. Once again, this first quiz that I'm giving you guys is for beginners. So the top three people will be winning one funded account. Now for the next quiz, it'll be a lot trickier. Less questions, more time. But for the top three people, I'll be giving away 2 funded accounts per person. All right, for the top 3 winners. All right, guys, this is pretty much my way and encourage you guys, to really learn and everything, so you guys can obviously get used to the strategy and all that good stuff. All right. I've always believed in rewarding for good, so yeah. All right. But yeah, like I said, with this one quiz, I'm not gonna spend too much time on it. Honestly, it's kind of just the basics, just to see, kind of warm you guys up. You know what I mean, stuff like that. And for my beginners in here as well, just in case you guys have questions, can you answer both? Of course, of course. This will be for everyone. I'll just send out the link and you guys just join. All right. Once again, here is the link for you guys. There you go. All right. But yeah, once again, for the second quiz, it will be pretty tricky. I'm not gonna lie. I was reading through my questions and I'm like, damn, you know what I mean? It's gonna get some people. All right. It's gonna have you guys really, really really second guessing everything. All right. But it's just so you guys know how to use a strategy in every single market condition that the market could give you, whether it's Trump, FOMC, Powell speaking, CPI, NFP, stuff like that. All right. But yeah, YouTube delayed? No, it is not delayed. It is instant. I'm gonna give you guys maybe 3 more minutes or so, and we'll go ahead and start it. All right. But yeah, I have a quiz, but oh, come on now, bro. But yeah, anyways, let me see. And by the way, guys, this I'll be sending for the top 2 people that win on each quiz. I'll be sending about 34. For the first one, I'll be doing 34. Hey, what's up? What's up? I'll be sending 34 to you guys, and then for the second quiz, I'll be sending 68 to every winner. All right. So once again, if you guys want to buy 2 funded accounts, you could do that. If you guys want to fill up your gas tank, you could do that. If you guys want to go buy clothes, you could do that. I don't really care. You know what I mean? It's just to reward you guys, from doing it. All right, let's get started. I feel like we have a pretty good amount of people right now. So yeah, now before we start, all right, I want you guys to get ready. All right, but before we start, oh yeah, you can also buy crypto as well. I don't really think $68 is gonna do much, but I mean it's something. All right. So before we start, guys, all right, I took the time to not only create the questions and give you, and obviously create all the answer choices, but I also took the time to really explain as to why those are the answers. Why exactly? Because guys, this is also to help you guys learn and really encourage you guys to learn my strategy. I mean, I show you guys literally every single day on stream with entries and exits, on how to use it, how I use it, and how exactly I get payouts using the same exact model that I teach you guys every single day. All right. So yeah, I'll be explaining every single question after obviously it's answered. All right, guys. So let's go ahead and get started. About 6 or 7 more people joined in the meantime while I was talking, but I feel like we're ready now. All right, so let's start it. All right, guys. So let's go ahead and remember, you guys are being what is it? The results will, like, the way you guys get at the top of the leaderboard is based off if you guys answer it correctly and how fast you answer it. All right. So yeah, keep that in mind. All right. So first things first, what is the first step before taking a trade? The market opens. What is the first thing that we're always looking at as the market is opening? Is it the drawn liquidity? Is it the trend, the MSS model, the fair value gaps? What is it, guys? This one is pretty simple, and all of the questions here will be pretty simple. All right. So let me go back to the question. All right. This is for my beginner traders. Remember, the first quiz will be kind of simple, kind of, what I mean, common sense. But to start off, what is the very first thing that we always do before the market opens or as the market is opening? Well, guys, we always need to make sure that we know exactly what the market is doing, which is going to be the trend. All right. So first things first is going to be identifying the trend. All right. Now I'm pretty sure here, if I go over to, I had the, what was it? Because I know I let me see. Oh, right here, view answer explanation. All right. So pretty much what the answer was obviously identifying the trend. Remember, step 1, all right, is identify the trend, then identify your levels of liquidity, wait for the market to open, wait for one of those levels of liquidity to get taken out, wait for the MSS model, and then wait for a reversal, which will be pretty much based off an IFEG. All right. So first things first is always identify what the market trend is. And obviously, if you guys look at the answer explanation before anything else, you must always know if the market is trending or chopping. Obviously, if it's chopping up coming into market open, then you won't really get a bias. All right, guys. So keep that in mind. The trend pretty much tells you everything always. All right. All right, let's go to the next question, guys. All right. Now keep in mind the first quiz, like I keep saying, is going to be kind of like the easier one. So it's going to be kind of more like common sense. All right. But going on to the next question, on which time frames do we typically always find the cleanest trend? Is it the 1 minute time frame, or the 5 minute, or the 15 minute, or the higher time frame like the 1 hour, or the daily time frame? Remember, guys, there were two answers for this one. You guys got to read and obviously make sure that you choose all of the right ones. All right. So is it the 1 minute time frame to find the trend, the 5 minute time frame, the 15 and 30 minute, or even the 1 hour or even daily time frame? All right, guys, I'll give you guys about 10 more seconds and we go from there. All right. Remember, this one isn't too hard to understand, and I'll explain exactly why. All right. So the answer, guys, was pretty much the 15-minute time frame, the 30-minute time frame, and the 1 hour time frame. Why exactly? Let me show you guys. All right. So if you look at the correct answers, 15-minute and 30-minute and the 1 hour time frame. All right. Why exactly? Guys, on the smaller time frame, I'm sure if you guys, look at the lower time frame, like the 1 minute time frame or the 5 minute time frame, there's a lot of noise. There's a lot of candles, left and right everywhere being created every single minute of the day or of market open. There's a new candle. All right. And that's a lot of noise. So what do? To block out that noise, guys, you go over to the higher time frame, like the 15-minute, 30-minute, or even 1 hour time frame, and you're really able to find the trend on those time frames. All right. It's so much easier because it's less candles and candles with like more reading behind them. All right. So if you guys look at the answer explanation on the 15-minute and 30-minute time frame, it pretty much cuts out all of the noise and creates a clean structure. I also forgot to add the 1 hour time frame, but it's also there. Now, on the 1 minute and 5 minute time frame, like I said, they are too noisy and show maybe too many candles. So the more candles we have, it's better to find an entry because obviously we can enter off anywhere. But in order to find a very, very clean and well-developed trend, use the 15-minute, 30-minute, or even 1 hour time frame. All right. So yeah, remember, there's two answers to this one. I'm pretty sure it said like in a big font, like there's multiple answers. So 15-minute, 30-minute, and the 1 hour time frame. All right. So let's go to the next question. Are you guys ready? 3, 2, 1. All right, let's get it. All right, so what does DOL stand for? This one is, if anyone gets it right, bro, if anyone gets it wrong, you got to go back to the videos, man. You know what I mean? But no, this is one of the easiest questions that I've put on the quiz. Remember, it's kind of just warming up for the first, 19 questions, and then we're going to get to the really hard ones, all right? This is where you guys are going to be winning 2 funded accounts for the top 3 people that get up there, all right? But yeah. All right, 5 more seconds. Let's see what we got here. All right. Let's see. So once again, what does DOL stand for? Draw on liquidity. And by the way, let me go ahead and move my face cam because I know it's in the way real quick. Let me move it just make it a little bit smaller. There you go. Just so you guys can see everything right there. All right, there you go. Anyways, okay, so what does DOL stand for, guys? This is a no-brainer. This is draw on liquidity. It's super simple. You know what I mean? So if you go over to the responses, obviously the correct answer is draw on liquidity. Why exactly? Well, guys, draw on liquidity, what it is pretty much just a pool of liquidity in the market where a bunch of buyers and sellers are placing sell orders or stop orders in the market, which pretty much just creates liquidity for banks, algorithms, institutions, and hedge funds to pretty much read and use. All right, guys. So that's pretty much what it stands for, and that's pretty much what it means. All right, or this one. So let's go to the next one. All right, 3, 2, 1. Let's go. All right, which of the following is not considered a level of liquidity? Guys, if you guys show up to the stream every single day, you guys know exactly what we look for. All right, I'm not gonna say the answer, but it's pretty simple. All right, guys, remember, draw on liquidity. It's in the name. All right, so which of these is not considered a level of liquidity? All right, so yeah. Let's go ahead and see. All right. Now, obviously, the correct answer, if you go over to the question, obviously, or right now, which of the following is not considered a level of liquidity? Is it the Asian high and low? No. In fact, that's one of the main ones that we look for. Is it the London high or low? No. It's also one of the main ones that we always look for. All right. So, is it the previous day high / low? No, we also look for that because that has a bunch of liquidity if it hasn't been taken out at the current moment. All right. or is it VWAP and EMA lines? Guys, when on stream have I been like, oh guys, we're crossing the VWAP, or oh guys, we're crossing the EMAs? Never. All right, so the correct answer to this one is EMAs. All right, VWAP and EMAs, we don't use that. It could work for your strategy, but me personally, I don't have it implemented into mine. I don't really use it, you know what I mean, here and there. All right, or I just don't use it at all. All right, so there's no explanation behind this one. It's pretty common sense. We're only looking for highs and lows that the market creates. All right, not highs and lows that the indicators give us. All right, we're not looking for scripts or any of that. We're just looking for pure price action. All right, now let's go over to the next question. All right, we're currently 5 out of 19. Like I said, this is the first quiz. Pretty simple one, you know, nothing crazy, whatever. But yeah. All right, now, when is the best time to trade? Guys, this is simple. All right, super, super easy. All right. But I'll explain why the answer is going to be the answer. All right. Well, everyone's, return her. They will. Trust me, for the second quiz, guys, it's going to take a lot of time. It's going to take a lot of time to actually answer them, all right? They're going to be really, really tricky, all right? Anyways, let's go over to the question real quick. What was the question? What is the best time to trade? Is it the New York AM session, New York lunch, PM session, or after FOMC? Obviously, FOMC, we don't even trade those days. Keep that in mind for the future. It might be a question. It might not be a question. All right, but guys, the best time to trade is always going to be the New York AM session. Why exactly? Guys, when the New York, all right, you guys know the stock market is basically the New York session, all right, from 9:30 to 4 p.m. EST. All right, throughout the overnight session, obviously the stock market is now open. So there's a lot of orders that are pending, waiting to be filled when the market opens. So why exactly is the first few opening candles from 9:30 to maybe like 10 a.m. EST always the best candles or always the biggest candles? Well, guys, it's because all of the overnight orders are being filled. All right, so keep that in mind. The New York AM session has the most volume pretty much 99.9% of the time. All right. So yeah, the correct answer to this one, guys, will be the New York AM session. Pretty simple. All right. Let's go to the next one. I want to get one and done with the easy quiz because honestly, you know what I mean, it's kind of like whatever. All right. It's pretty much common sense. But what do we call the moment the market flips trends after a drawn liquidity sweep? Once again, if you guys always show up to the streams, you guys know exactly what we always look for. All right. It's a few confirmations. It's a DOL sweep, then, you know what I mean? And then the IFEG. All right, what more do we look for, guys? All right, I'm going to give you guys 5 seconds behind this question, and we go to the next one. All right, I'm trying to get done with this one real quick so we can go to the tricky one because I want to see how you guys react off that one, all right? But finishing this question right here, what is the correct answer? If you go over to questions real quick, or the correct answer behind this one will obviously be the MSS model, all right? Pretty simple. Remember, guys, market opens. We identify the trend. Then we identify where the levels of liquidity are. We wait for those levels of liquidity to get taken out, and then we wait for an MSS model, and then the cherry on top, which will be the IFEG model, all right, the reversal model. All right, can you still join? Of course. Here you go, man. Here you go. All right. So yeah, remember, we're looking for a market structure shift always. All right. After a DOL sweep, the one thing we look for is an MSS model. If you don't get it, that's it. We just don't trade it. All right, guys, pretty simple. All right, let's go to the next one. All right, next question. After an MSS, so, you know, we're on the MSS topic. All right, after an MSS, what are we typically looking for to enter a trade? Are we looking for VWAP? I just told you guys, obviously, this is going to be a freebie. I don't trade it VWAP. I don't have it on. I don't think about it. I don't consider it. I don't really care about it. All right, so obviously, VWAP is not going to be the answer. So is it fair value gap / IFEG? Do we look for a DOL sweep after the MSS, or do we wait for a break of structure? All right, because I know some of you guys in here might be trading some break of structures here. All right, so what exactly do I personally look for when I'm trading my model? Well, it's always going to be, let me show you guys real quick. It's always going to be the fair value gaps. All right, remember, guys, I literally just told you. Identify the trend, identify your levels of liquidity, wait for your levels of liquidity to get taken out, wait for the MSS model to form, and then we wait for an IFEG or a regular fair value gap, depending on what the market gives us at the time. All right, so obviously the correct answer is going to be the IFEG or / FEG. All right, and here's exactly the explanation. Like I said, I'm not really trying to spend too much time on the common questions. I know pretty much all of you guys know exactly how to answer it, so let's go straight to the next one. All right, what size stop loss should be used under normal market conditions? All right, now I know this might be a little bit of a personal question because everyone has their own stop loss, but what do I pretty much teach you guys in terms of having your stop loss? All right, remember, under normal market conditions. All right, someone just said, what's a stop loss? Bro, But yeah, no, no. On a real note, what exactly, what stop loss do we use under normal market conditions? This should be a no-brainer, guys. Remember, we want to give the trade enough breathing room, but not enough for us to blow our accounts up. All right. So yeah, for me personally, I know some people might use 25 points. This was more of a personal question. I do understand if you guys are choosing 25 points. It's kind of, personal preference. But for me, with my strategy, I always tell you guys to use about 30 points. It's just like a perfect amount of breathing room to determine whether the trade should be going in your favor or not. All right. So obviously, if you look at the normal explanation or the answer explanation, it'll be obviously under normal volatility, 30 points provides enough room without risking obviously too much of a size. I used to do 25 points, but I felt like that was too tight of a stop loss because I would get top ticked a lot. So I kind of just micromanaged it to 30 points. All right, guys. So yeah, the answer will be obviously 30 points over here. I'll be using a 30-point stop loss for well over a year now, and it's worked amazing. It's my favorite. All right. So let's go to the next one. All right, guys. Now, if the market is high in volatility or very risky, let's say for example Trump is speaking or Powell is speaking, or we have CPI news and NFP news or any type of news, right? The market is just super volatile right now. What is the stop loss that we typically always use? Is it less or is it more? Is it less to risk less on a risky trade because of news, or is it more because obviously we're risking a lot more with the volume and all that stuff? All right. So what exact stop loss do we use every single time? All right, guys. So let's go ahead and look at the answer real quick. Now, once again, the question was if the market is high in volatility or just very, very risky in general, what is the usual stop loss kind of just adjusted to? All right, guys, it's always going to be 35 points. All right, guys, remember, the reason we're using a 35-point stop loss in a very, very volatile market is mainly because the market is just moving so much more aggressive. All right. So those pullbacks can be just a little bit more aggressive and it could exceed that 30-point stop loss from the normal market condition. All right, guys, keep that in mind. All right. So in volatile conditions or just in risky setups, a wider 35-point stop loss just gives you more breathing room in that trade for, just unexpected, more aggressive pullbacks. All right, guys. So yeah, 35 points is the correct answer. All right. Now we have about 10 more questions left, and we're gonna go to the hard quiz. All right, guys, this is the one that I really want to see how you guys are reacting with. All right, guys, but once you not take a trade, all right, guys, remember this is a multiple choice question, so take your time reading this. All right, guys, it is a multiple choice question, so there are more than one correct answers, pretty much. All right, guys, so keep that in mind, guys. All right. So yeah, once you not take a trade, remember, guys, I'm always preaching it to you guys. If you're second guessing the volume, if the market fails to create higher highs and higher lows, which is going to be the trend, and it's kind of chopping up, or before any major news, or just when previous setups of the day just aren't being respected, which do you guys think is just not tradable? Well, in fact, every single one of these conditions, guys, is just not tradable. I always tell you guys on stream, always, guys, what should you do? If you're just barely even questioning the setup, then you're just not confident with it. All right, guys. I know this one was a little bit tricky, and I'm telling you guys, read it. All right. Maybe there's more questions like this. Maybe there isn't. So keep that in mind. Keep that in mind. But yeah, every single one of these conditions, guys, you shouldn't be trading if you just don't feel confident in the setups. All right. Am I trying to fake you guys out? I mean, you got to read, bro. You know what I mean? The market will treat you the same exact way. All right. So yeah, if you're even questioning the setup, guys, do not take it. All right. It just means that you're just not confident in it. All right. If the market is chopping up, failing to create a trend with higher highs, higher lows, or even lower highs and lower lows, you just don't trade it, guys. It's that simple. All right. Obviously, guys, you shouldn't be in a trade before any major news comes out. Are you trying to gamble it? You know what I mean? Obviously not, guys. It's not going to be a high probability trade, right? And if previous setups of the day are just getting faked out, then that just kind of means that the market is just not aligned with the strategy and it's just not respecting it for the day. All right. For example, let's say that the market is kind of chopping up and we've inversed 2 or 3 fair value gaps. They didn't work out. Do you think that the fourth one might work out? Probably not. The probability is going to be a little bit lower. All right. So yeah. Oh, and by the way, yeah, previous setups. No, when the previous setups of the day are just getting faked out due to slow volume. Exactly. Yeah. So yeah. All right. Now I know maybe you guys might be a little bit questioning. Hey, the fourth answer should have been the right one. But think of it in probability. All right, guys, think about it. Think about it. All right. Since market open, let's say right now it's 12 o'clock, right? Since market open, we've had three setups, right? Three setups that tried working out and they got faked out. Do you think the fourth one might work out? Probably not, because the previous three didn't work out, which means that the probability with the volume for the day of that you're pretty much trading is just not going to be as high. All right. So in most cases, you're probably better off just calling it and coming back when the market is looking a little bit better. All right, guys. So yeah, keep that in mind. Keep that in mind, because I know some of you guys in the chat might be like, hey, I mean, this one doesn't really make sense, but really think about it. All right. It's just a game of probability. All right. All right, let's go to the next one. All right, guys. Question number 11. This one will be tricky because you guys are always having questions and struggles with trimming. All right. After trimming at least half of your position at a 1-to-1 risk reward ratio trade, what does this mean? If you're risking 30 points, right, you should be trimming at plus 30 points for a 1-to-1. All right. What should you do next? Should you leave your stop loss at where it was when you enter the trade, which would be in the red? Should you move your stop loss to break even to micromanage the trade and limit the downside possibility? Should you add more contracts, or should you just take full profits at a 1-to-1 risk reward trade? Someone said definitely add more. You know what I mean? Maybe, but no, guys. The right answer to this question, guys, is obviously move your stop loss to break even. Remember, guys, in the stock market or in the futures market or whatever you're trading, right? Your job is to micromanage that position. Try to make it as risk-free as possible, so the upside possibility is endless and the downside possibility is as limited as break even. All right, guys, because there have been times where, you know, I mean, what I'm trying to say is the worst feeling in the world is having a green trade go red and getting stopped out. All right, I'm one to speak because it happened to me last week. I broke a little bit of my rules and I did pay the consequences. But just so you guys know, obviously the right answer to this question is obviously move your stop loss to break even, just so you can micromanage that trade first. All right, or you know, to limit the downside or to limit the risk. All right, guys. So keep that in mind. All right, let's go to the next one. All right, what does an IFG, an inverse fair value gap, signal? All right, guys. Is it a continuation model? Is it a fake out? All right, yeah, I already said the trend continuation. Does it mean the trend is weak because we're not respecting the fair value gap, or is it a complete reversal? All right, guys. What do you guys think it is? Let me know. Light work. All right, let's see, bro. Let's see. All right, keep in mind, guys. Don't get too confident with these questions, right? You don't be like, yo, this is too easy. All right, because guys, once we go to the next quiz, I know I'm not gonna lie to you guys. Some of you guys might be shitting yourself with the questions I'm gonna be asking. All right, guys. So yeah. Anyways, the right answer to this question, guys, is obviously a trend reversal, guys. When we're inversing a fair value gap, all right. Think about it. All right, guys. Let's say, for example, right, the trend is bearish. We are going down, and we just created a bearish fair value gap. All right, now we took out a level of liquidity, and we're about to inverse that fair value gap. What does it mean, guys? It means that the trend is reversing. In most cases, it just means that the trend is reversing. All right. So once again, think about it like this: trend is bearish. All right. Wait, let me go over here. Right. Let's say that the trend is bearish. We created a bearish fair value gap. We took out a level of liquidity, and we then inverse that fair value gap right after. What does that mean? The trend is reversing. All right. Keep that in mind, guys. Keep that in mind. All right. So the right answer to this question was obviously a trend reversal in most cases. All right, guys. So yeah, let's go. Now, someone here in the chat said, if you're inversing the fair value gap, you should have had an MSS and it will be continuing. Well, no, if you have an MSS, what an MSS is the market changing the structure. So if the structure is lower lows and lower highs and lower lows, and we're shifting the structure with the MSS, that means that it's going from lower highs and lower lows into higher highs and higher lows, right? So that's when you will take the inverse fair value gap, which means that the trend is reversing. All right, keep that in mind. All right, guys, let's go to the next question. All right, which time frame should not be used to identify the trend? This is kind of similar to the question that we had at the start. So I kind of explained this, so let me know if you guys were obviously paying attention. You guys shouldn't have an issue in getting this one right. All right, guys, once again, which time frame should not be used to identify the trend? This is the 15-minute, 30-minute, the 1-minute, or the 1-hour time frame. I went into full detail not too long ago explaining which one should be the right answer with one of the questions that we had previously. All right, guys, so let's see what we have here. All right, and we're getting closer to finishing the quiz, guys. We have about what, like 5-6 more questions, and we're going to the hard one. All right, this one was more of a warm-up. All right, guys, but obviously, guys, the the right answer to this question is obviously the 1 minute time frame, guys. We do not use the 1 minute at all, not even for the entries. All right, it's just too much noise in the 1 minute, and there's too much happening that to the point where it's, you know what I mean, we just can't do it. All right, so yeah, the 1 minute time frame, we don't use it. All right, we use the 15 minute, 30 minute, and the 1 hour time frame to always find our trends. All right, guys, it just cancels out all of the candles, and you know, it just gives us more room to kind of identify what's going on in the market. All right, let's go to the next one. All right, guys. Now, what is the minimum size of a valid fair value gap on NQ? Not ES, but NQ. All right, guys. What is, and keep in mind, when we're looking for a fair value gap, we always need to make sure that most, if not all of the candle is a body candle. If it's not a body candle and it's mostly a wick, it is not a valid fair value gap. But guys, what is the minimum amount of points that we look for when we're looking to trade a regular fair value gap? All right, guys, is it 10 points? Is it 20, 40, or 50? All right, let me know, guys. This one should be a pretty easy one, but let's see what you guys are thinking. All right, and I'll be surprised for the people, 50 points. Guys, no, we don't really look for, I'm surprised you guys are putting 20 points. Remember, guys, we're always looking for a minimum of 40 points. That's the one thing you guys need to know when looking for fair value gaps. Because look, all right, now let me put here the explanation. All right, now let's say, for example, right, you have your DOL sweep, you have the MSS model, and buyers are stepping in, right? And you see a candle that's 20 points. Can you trade off of it? No. Why exactly? Because, guys, anything below 40 points just lacks conviction and is less likely to hold and get respected. Why exactly? Because there's not much of an imbalance in the market. All right, guys, if there's no imbalance in the market, it just won't get respected like how you're thinking. All right, so remember, we're always looking for a minimum of 40 points on the 5 or 15 minute time frame. If it's any less, we are not going to take it. All right, what about 39 points? I'm very picky about my setups. If we're just barely even, if we're struggling to even hit 40 points, it's just not worth trading. All right, so if it's 40 points or more, minimum 40 points, no less, you're not going to take it. All right, guys, so yeah, once again, the right answer to this one was 40 points. Pretty simple. All right, let's go to the next one. All right, we're almost done with this one, guys. And like I said, I'm excited to do the next one because I really want to teach you guys what happens in the markets with, you know, the scenarios that I put in the questions. All right, but anyways, where should the stop loss be placed when entering from a regular fair value gap? Not an inverse, but a regular fair value gap. All right, guys, is it at a random level, you know, like a random 30 point level or whatever? Should it be inside the fair value gap, wherever that is, at the bottom of the fair value gap, or 30 points from the bounce or rejection that we get from the fair value gap? All right, guys, think about it. All right, let's go ahead and see what you guys were saying here. Now, this question was, although it should be a beginner question, it is a little bit, you know, a little bit trickier than the rest, but let's see what you guys answered. All right, at the bottom of the fair value gap. I kind of understand where you guys are coming from, but with the confirmation that we personally use, if you guys place your stop loss at the bottom of the fair value gap, you're going to be exceeding that 30 to 35 point limit, which won't always be the case, right? It's not always going to be the smartest thing in the trade. All right, David, are you going to be announcing the winners? Yeah, I got you guys. Don't worry. Once the quiz is done, I'll be sending you guys the money, and we're going to be getting started with the next one. All right, but guys, the right answer to this question was obviously 30 points from the bounce or rejection from the fair value gap. All right, so let's kind of think about a scenario here. All right, let's say, right, remember, we're taking a continuation model, which means that, let's say, for example, the trend is bullish, all right, and we have not taken out a level of liquidity to the upside. This means that we can look for a retracement into any of the bullish fair value gaps that we created as we're going up, right? And now, let's say, for example, right, we go down into the fair value gap. Obviously, we're not looking to inverse it because we're bullish, right? We think that price is going to go into the level of liquidity above. All right, so what this means, guys, is we wait for a retracement into the fair value gap, followed with a 30-point bounce to confirm that buyers are stepping in once again. Once we get that 30-point bounce, we're going to place our stop loss at where the market bounced from inside of the fair value gap. All right, so sure, the question or the answer could have been inside of the fair value gap, but you guys got to be very specific. It has to be 30 points from where the market bounced or rejected from. All right, it can't just be inside of the fair value gap, because where exactly are you going to place it inside of the fair value gap? You have to be very, very specific. It has to be 30 points from the bounce or rejection. Keep that in mind, guys. All right, when we're looking for a continuation model, it's always 30 points above or below, right, from where we rejected, not just because we went inside of the fair value gap. All right, guys. All right, let's go to the next one. All right, now, what is the purpose of trimming at a one-to-one risk reward? All right, guys. Is it to lock in some profits as the trade goes into your price targets above, or it can get a little bit closer to your price target? Is it to micromanage the trade and make it risk-free, or to get out of the trade early before your take profit gets hit? All right, guys. Remember, this one is a multiple choice question. All right, guys. Multiple choice. All right, so keep that in mind. Don't rush it. You know, all that stuff, guys. There's multiple answers in here that's correct. It could be all of them. It could be the second one. It could be the first one. It could even be the third one. All right, guys. But let's see what we got. Let's see what we got. All right. There's about 12 seconds left into this question, and we're almost done with it, right? All right, guys. We're 16 out of 19 questions. All right, let's see what we got here. All right. Now, okay, so most of you guys ended up getting it right. Now, for the 8 people that, why would you guys answer this one? You know what I mean? Why would you guys want to get out of the trade early at a 1-to-1 risk reward when the trade is kind of still going in your favor? All right, guys, remember, we're taking trims out of 1-to-1 to make our stop loss risk free, but we're not making the trade 1-to-1 to get out that early. It's just to micromanage that position to then let the trade go into our, into our price targets without risking any drawdown. All right, guys. Yeah, I'm actually curious who were the 8 people that chose this. Can I see? Nah, it's not important. Whatever. But whoever it was, now you guys understand. Obviously, if you guys look at the answer explanation, taking trims at a 1-to-1 risk reward ensures that you bank profits or you make profits even if the runners don't reach the price targets that you're hitting. Obviously, as you're micromanaging that trading to break even, you guys should be good to go even if the trade doesn't hit your price targets. All right. But I'm curious to the people that chose this one. I actually am. But anyways, all right. Which of these days should you avoid trading? Should it be FOMC? Should it be the day before OPEX? Should it be CPI? Or should it just be Mondays in general? Because I know a lot of people in here, you guys use Mondays to kind of get a reading of the market. But should you really avoid trading Mondays? All right, guys. Let me know. Let me know what you guys are thinking. Now, there's only one answer to this question because I made it very, very specific. Which day in general should we just avoid completely? Is it CPI? Is it FOMC? The day before OPEX? Not the day during OPEX, but the day before, or just Mondays in general. All right. Are you trading this Friday? Probably not, because yeah, it is OPEX. All right. But let's see what you guys ended up choosing in this one. All right. So obviously the answer to this one, guys, is FOMC. We do not trade no matter what it is. We will never be trading FOMC for the entire day. All right. I do not trade FOMC days. Now, the day before OPEX, we could trade it. You know what I mean? It's not the day of OPEX, so it's still tradable. All right, CPI days. Honestly, some people might be thinking like, hey, I don't really trade CPI days, but the reason I'm saying you can trade CPI is because, guys, CPI comes out before the market opens, meaning that when the market opens, there's not going to be any crazy unexpected news because obviously CPI already happened. And the same thing goes for Mondays. Mondays are just regular days, in my opinion. All right, guys. So for this one, the right answer to this question was obviously FOMC. If you guys look at the explanation, FOMC days creates anticipation. Why exactly? Because FOMC is the only major red folder that comes out during the New York session. All right, typically when typically when red news comes out or red folder news come out, it's typically at 8:30 a.m. EST. All right, but with FOMC, it's the only one that comes out 2 hours before the market closes, typically on Wednesdays. All right, guys. So we just don't trade the entire day for FOMC because why exactly? If the market anticipates FOMC, this means that it will more than likely be chopping and be really, really indecisive with the candles, not giving you a very, very good trade to take. All right, guys. So we just don't trade FOMC days at all. All right, but let's go to the next one. All right, guys. We have 2 more left. All right, so let's get this done. All right, guys. Which indicator do we use to mark out the highs and lows? All right. Now, for this one, you guys really need to be paying attention. All right. Is it RSI? Is it VWAP? Is it EMAs or ICT kill zones and pivots? All right. Which one do you guys think it is? Now, this one you really need to be paying attention. All right, guys. So keep that in mind. All right. But in the meantime, let me start getting this ready. Let me see. We're getting started with the, how do I write this? All right, hold on. Let me get back to the quiz real quick. All right. So guys, once again, this one, I'm not even gonna bother explaining it. If you guys go over to my YouTube videos, obviously you guys are watching me on YouTube right now. If you guys click on my page, you guys will know exactly which answer this will be because I made a whole video specifically for this topic. All right, guys. So obviously the correct answer to this one is ICT kill zones and pivots. It's the one that I use every single day to find all of my levels of liquidity throughout the overnight session. All right, guys. All right, let's go to the final question. All right, guys. Let's see what we have here. Why do we avoid FOMC days? All right, guys. So many of you guys always ask me like, hey, why aren't you trading on this day specifically? I'm about to explain to you guys exactly why. All right, so while you guys answer this, guys, it's a multiple choice answer. All right, so keep that in mind, guys. So yeah, anyways, let me go ahead and get ready on Discord with the next quiz. We're getting started with the All right, let me go ahead and put this out real quick. Give me 1 second. All right. Oh, okay. There's a lot of mixed answers here. All right. So this one could be a little bit tricky. All right. But let's see what we have here. All right. So why exactly do we avoid FOMC days? And guys, please pay attention to this one so you guys aren't in the chat asking, hey, why aren't there any trades? All right, guys. Well, it's because most of the time, if not all of the times, guys, it's because investors typically anticipate the FOMC report before it comes out, and they don't really put any more money into the markets until it comes out, making the markets very slow and very choppy because it's not getting any money in. All right, guys, keep that in mind. Now, it's also because Powell controls the direction unpredictably because, guys, obviously we don't know what Powell is going to say until he says it. All right, no one can really read his mind. If you can, then you probably won't be on stream right now. You will probably be a billionaire. You know what I mean? But on a more serious note, guys, these are the two main reasons as to why we don't trade FOMC. Mainly because obviously investors, they don't put money until it comes in, and obviously we can't really chart exactly what Powell is going to say, so we don't know if the markets are going to go up or down. It's mainly a gamble, right? So you're better off just not trading the FOMC day in general. All right, guys, so keep that in mind. Why is it not hard to read with unexpected spikes? Remember, it's unexpected spikes. So typically what tends to happen, guys, is spikes, they're not really readable. Why? Because with spikes in the markets, it's pretty much based off news. There's nothing in the chart that will tell you, hey, Trump is about to release tariffs at 9:19 a.m. EST, exactly on point. That's not going to happen. All right. And the same thing goes with FOMC. We don't know exactly what Powell is going to say. So why would you try trading it? It's more like a gamble. You get what I'm saying? So yeah. But anyways, let's go, and we're pretty much finished. All right, so I have to go ahead and check the leaderboard real quick. All right, so let's see who the top 3 winners are, and let's get started with the next quiz. All right, guys, so let me go ahead and see. Hold up, let me see. All right, bet. So I'm pretty sure if I click, wait, how do I check the leaderboard? I'm pretty sure if I click end assessment, right? I don't want to end it and just not get the leaderboard. Yeah, I'm just gonna click end, right? Because I want to see the leaderboard as well. How do I check it? Just, no, hold on. I'm pretty sure if I click end, let me see. Hold up. All right. I was about to say, all right. Anyways, let's see who the winners are, man. All right, so Zumdude, Sergio M, and Good Day to Trade. Now, guys, we're not done yet. All right, guys, we are not done yet. All right, because now we're gonna be going on to the more. Wait, who was it? It was. Wait, let me write down the names real quick. Hold up, give me a second. It was Sergio. Hold up. It was Zumdude. It was Sergio M. And who was the last guy? Good Day to Trade, right? All right, guys, I'm gonna send you a DM on Discord real quick, guys. Respond to me real quick, and I'll send you guys the money for the funded account. Remember, for this quiz, it was 1 winner. All right, but guys, we're not done yet. All right, now we're gonna be doing 2 winners. All right, guys. Yo, send me your PayPal, Cash App, or Zelle. I'll send the money after the stream. After the quiz. All right, let me go ahead and send it over to everyone else, guys. Give me 1 second. Sergio M. There you go. And let me see. Good Day to Trade. All right. In the meantime, guys, I'm gonna be prepping for the second quiz. So let's go ahead and get started here. All right. So I'm gonna be giving you guys here. Let me kind of change my stream overlay real quick. All right, there we go. All right. So congrats to the winners, guys. But don't worry, guys. We're gonna be going to the second quiz, guys. Now this one is gonna be a little bit tricky, so be ready for it. All right, guys. I'm excited. All right. So let me make sure that I'm putting everything out on Discord real quick, guys. Give me 1 sec. So let me see. We're getting started we just wait. We're getting started with the extreme quiz where I'll be giving each winner 2 funded accounts for free. Join up before we get started for a chance to win these accounts. All right, let's get this started. Yeah, congrats to the winners, guys. Congrats to the winners. All right, anyways, okay. So, guys, let's go ahead and get started with the second one. Now, I'm super excited with this one, guys, because I put a lot of time and effort into this one. But yeah, all right. Link. All right, I'm about to send it right now. Give me 1 second, guys. Give me 1 second. Are you guys ready? Remember, guys, join with your Discord username. All right, guys, join with your Discord username so I know exactly who to DM. All right, guys, here's the link once again. I'm gonna catch up with the chat now. Give me 1 sec. Replace paid message. All right, someone here in the chat said, oh, and by the way, for the people that won the giveaway, guys, once again, if you guys are gonna be buying accounts, make sure you guys use code Blastoise. It is at the top of the screen. Make sure you guys use code Blastoise on Apex to go ahead and get access to 80% off any funded account. All right, guys. And in the meantime, after we finish the second quiz, guys, I'll be sending all of the winners the money. So I have Zumdude, Sergio M, and Good Day to Trade, 1 account each. All right. Now for this current quiz, guys, we're gonna be doing 2 accounts each. All right, guys, you guys will be winning 2 50K accounts each. All right, guys. But yeah, someone here said, what if we win and don't have Cash App, PayPal, or Zelle? Could you do crypto? Those are the only options I have. I don't really do crypto. I don't have a crypto account. But if anything, we can figure it out. All right, bro. So yeah, don't worry. But anyways, guys, go ahead and click that link over in the chat. And I'll start it in about, a few minutes from now. All right, guys. But yeah. I'm just going to see. Yeah, just create a pay. Yeah, it takes 2 seconds. It's the easiest thing in the world. But yeah, and obviously, before the stream ends, I'll obviously be showing proof of me sending you guys the money for the account, so you guys can go ahead and copy it. All right, guys. So yeah, by the way, let me see. Yeah, it's easy. That's what I'm saying, bro. How's it? Well, everything's good, bro. It's gotten a lot better. So I'm ready for tomorrow's stream for sure. All right, bro. But yeah, anyways, okay, yeah. So I just got the Cash App from Sergio as well. Okay, so I got it from Zumdude and Sergio. So Good Day to Trade. If you're in the stream, bro, make sure you send me your Cash App, PayPal, or Zelle or whatever, so I can send you the money for the funded accounts. All right, my man. How many questions is in this one? Okay, guys, so this one will be 14 questions, but it'll be 14 very, very complicated questions. So I really need you guys to take your time and answer it. All right, guys. And with this one, guys, it's gonna take a little bit longer because I will be fully explaining every single situation behind every single question or every single answer. All right, guys. So keep that in mind. Keep that in mind. All right. Let me catch up with the chat here in Discord. Bro. Does the score go by how fast you answer it? Yeah, obviously it goes by obviously if you get it correctly and how fast you answer it. But does this mean you should be rushing it? No, because then you're gonna get it wrong. Keep that in mind, guys. All right, keep that in mind. All right, but once again, I'm gonna give you guys maybe like 2 more minutes, and we're gonna go to the next one. All right, guys. So I'm excited with this one. I'm excited. All right. Bro, you missed, bro. All right, anyways. All right, let's get started. All right, you guys ready? Let me see. There's about 126 people. There's about 120 people on stream. So yeah, this should be enough. All right, you guys ready? All right, let's do this. All right, so remember, guys, once again, just so you guys can kind of understand here, all right? This will be the final quiz for today. All right, for the top 3 winners, you guys will be winning 2 funded accounts each for the top 3 winners. All right, guys, I'll be sending all of the money out once this quiz is done. And for each and every single question, there's 14 questions. For each question is going to be 1 minute to answer it. All right, guys. Now, these questions are long. The answers are long. So take your time. All right, guys. This will be the most competitive quiz that I've done yet. It will be the hardest one. So be ready. In 3, 2, 1. Let's do it. All right. First question. All right. Out of the 14. Price sweeps the Asia low, then quickly bounces back above it, meaning that we're getting the DOL sweep. Now, on the 5-minute candle, it forms a small body fair value gap for about 28 points. What should you do? Enter immediately from the fair value gap as the DOL and MSS is confirmed? Maybe. right? Wait for a bigger fair value gap, or maybe even skip this entire setup, mainly because the fair value gap is just too small. Or just take it anyway because the DOL sweep and MSS is pretty much all that matters and why the market reverses. Or switch to the 1 minute chart and possibly try to find a better looking setup. Which do you guys think is the correct answer here? All right, guys. Now this, it depends on the market condition. All right, but there's only one correct answer behind this question. All right, guys. Remember, once again, read it. Right. Keyword: small-bodied fair value gap for 28 points. All right, keep that in mind, guys. It's super delayed. I can't really control it, my man. I don't know if it's a stream or the quiz, but I can't control it. All right. Anyways, guys, the first answer to this one. All right, obviously the correct answer to this one, guys, is obviously wait for a bigger fair value gap, or maybe even just skip the entire setup, because, guys, a 28-point candle, right, a small body, not even a full body candle, a small body candle, meaning that it's mostly a wick, right, for 28 points is not a setup. All right, guys, what's the code again? Here you go. All right, it is not a setup. All right, keep that in mind, guys. All right, so obviously just wait for a bigger fair value gap to be formed, or just don't even take the setup. That simple. All right, guys, let's go over to, by the way, let me kind of explain it. All right, so obviously the fair value gap is invalid because it is under 40 points and it is a small body candle, meaning that most of the candle is a wick. So even if it was 40 or more points, it still wouldn't be valid because most of the candle is a small body candle. All right, guys, remember, what we're looking for is little to no wicks in the candle. All right, if the body has if the candle has a very, very little body, then obviously it is mostly a wick. So it is not even tradable in the first place. All right, guys, keep that in mind. All right, let's go to the next question. All right, guys, we're currently 1 for 14. All right, next question. All right, on the 15-minute time frame, right? Let's say, for example, price has swept out of the upside drawn liquidity and is currently forming a bearish MSS model, meaning that it's going from higher highs and higher lows, took out the level of liquidity, to now creating lower highs and lower lows. Now, on the other hand, ES is still pushing a little bit higher because it has not taken out any levels of liquidity. What is the best case? What is the best thing to do in this case? All right, guys, remember, NQ took out all the levels of liquidity and is trying to form a bearish MSS, and ES, on the other hand, it's still going up, but obviously it has not taken out any level of liquidity, meaning that it still has room to go higher. So in this case, we have NQ going down and ES going up. What is the right thing to do? Take the short immediately because obviously NQ, the structure in NQ flipped. Wait for ES to align before NQ, before entering for a little bit more confirmation. Ignore ES because obviously we're trading NQ, right? Or enter, put double your stop loss just in case ES goes a little bit higher and NQ just kind of sits there. All right. What do you guys think is the right answer here? All right, now this one is pretty simple. We're warming up there, right? But guys, the right answer to this one is obviously wait for ES to align with NQ before entering, right? And I want to kind of tell you guys, there have been times where I've tried taking shorts on NQ when ES told us it wanted higher, and I've gotten stopped out. All right, guys, so make sure that ES is always aligning with NQ so you get the best of both worlds. All right. Now, if you go over to the answer explanation, once again, like I said, ES and NQ should always align before taking a trade. If ES is still bullish while NQ is going down, obviously, if ES wants to take control of NQ, NQ can go right back up and start following ES. All right, guys, so keep that in mind. They should always be aligned. So before you guys take a setup on NQ, look over at ES and be like, okay, is it doing the same thing or is it not? If it's not, then I should probably just wait it out and make sure that everything just kind of aligns before I take the setup. All right, guys, keep that in mind. Always keep that in mind. All right, now let's go to the next question. All right, now, during the New York session, the AM session, in fact, right, once New York opens, price sweeps the London low, creates an MSS model from bullish to bearish, meaning that it goes from lower highs and lower lows into higher highs and higher lows, then creates a 45-point fair value gap. All right, then price re-enters that fair value gap, but does not reject it. In fact, pushes through the fair value gap, inversing it. All right, what does this mean? Does it mean that the fair value gap setup is invalid, making the setup completely get messed up and you should avoid it? The MSS is failing because we tried sweeping it, but we're going right back down into the level of liquidity. The trend is reversing right back down, so you should go short, or the candle was too small and just wait it out. All right, what's good, bro? What's good? But yeah, what do you guys think is the right thing to do here? All right, guys, read it and really, really think about it. All right, guys, remember, we took out a level of liquidity, we swept it, we tried forming the MSS model, we formed a fair value gap, but instead of bouncing from that fair value gap, we inverse it back down. What does that mean? All right, should you take shorts? Should you avoid it? What should you do here? Guys, in this case, we should be, once again, the right answer in this case should be the fair value gap is invalid. All right, let's think about it. Let's kind of go back a little bit. All right, so the trend is okay. Look, right, the New York session just opened. We have a level of liquidity to a downside. All right, we take out that level of liquidity to a downside and we hold above it, creating an MSS model. All right, why are we creating an MSS model? Because guys, we're going down. We took out a level of liquidity. We took out the objective. Sellers are losing interest. Buyers are gaining interest. And we go back up. So we go from creating lower highs and lower lows into creating higher highs and higher lows. Now, as we're going up, we created a bullish fair value gap. So in this case, what the reasonable thing to do would be, or what the reasonable thing to do, I don't know how to word it. You guys get the point. All right. So what we would typically do would be we retrace into the fair value gap. Then we get a bounce. All right, we retrace into the fair value gap and we get a bounce because we're now bullish. But let's say that the fair value gap just completely gets inversed and we go right back down to the level of liquidity that we took out. All right, this pretty much just means that the fair value gap setup, it's not valid. All right, so you just should not be taking a trade at this current moment. All right, guys, so you should just completely miss out on the setup. All right, that question. No, I mean, it's a little bit trickier. Probably maybe it might not make sense to some people, but it is an actual condition or an actual thing that happens in the market. All right, keep that in mind, guys. Keep that in mind. All right, so yeah, the MSS, it's not that it's failing, but I mean, it could be both things. I should have put multiple choice, but in most cases, it's just mainly that the setup just got messed up. The fair value gap setup got messed up. All right, keep that in mind. All right, so let's go to the next one. All right, now, let's say you see a 15-minute chart creating a clear higher high and higher low trend, meaning that the trend is bullish and it's going towards that Asia high. So let's say, for example, right, the market is currently going up, right? It's creating higher highs, higher lows, but it has not taken out that Asia high. It's going into it, right? But now you see stacked fair value gaps on top of each other. So let's say, for example, right, we have a ton of buyers stepping in and we created a fair value gap here and we created a fair value gap right over here. There's two fair value gaps. What is the dangerous thing, or what makes a setup risky, in kind of taking it? And keep in mind, guys, there are two answers or maybe three answers in this question. It's multiple choice. All right, so price might chop in between the fair value gaps. Price could inverse one fair value gap going into the Asia high and reject off the next fair value gap right above it before it hits the Asia high drawn liquidity. Or if the momentum slows down, price can get weak and kind of chop in between the fair value gaps. All right, so what do you guys think is the right answer here? Let's see what we have here. So a lot of you guys, actually, it's all 50-50. All right, so let's see what we got here. All right, guys. In fact, it is every single answer. All right, guys. So actually, a lot of you guys got all of these right. So props to you guys. All right. Now let's kind of get a little bit more into it. All right. When price is nearing a major drawn liquidity. So let's say, for example, right, the trend is bullish, right? So we're going up, down, up, down, up, down, right? And we have a level of liquidity above, but we're also approaching some fair value gaps here. What can happen? Well, with stacked fair value gap, it can trap late buyers before a reversal. And if the momentum slows down, everyone can get stopped out because we're rejecting off of a major bearish fair value gap. Keep that in mind, guys. All right. So let's go to the next one. All right. Now, let's say, for example, it's currently the New York session and it's currently lunchtime. So it's about 12 to 1 p.m. EST. The market is trending, pretty clean, and it has already swept the Asia high and London high drawn liquidity. Now, you find a valid 50-point fair value gap rejection at 12:15 p.m. EST. Should you take the trade? All right, let's go ahead and see, right? So yes, as long as the trend is clean and volatile, because price hit all of the objectives to the upside and is rejecting from a bearish value gap above the level of liquidity that we just took out, right? It makes sellers stepping in, it makes the setup valid because sellers are stepping in with all of the bearish confirmations. Or you shouldn't be taking the setup because it is currently lunch hour and price always chops up at this hour. Or maybe it is the right thing to do, but reduce the size because the trade is super risky because it can get a little bit choppy due to the hour in the market. All right. So yeah, let's see what we have here. All right. All right, let's see. So if we go over to responses. All right, so the correct answer here, guys, is yes. As long as the trend is clean and volatile, if you have all of the confirmations, no matter what time it is in the day, you could still take the setup. It doesn't even have to be the New York lunch hour session. It could even be the Asia session or the London session. You know what I mean? As long as you have the volume that you like, the confirmation that you like, and the setup is there, you can always take it, guys. All right? Just because it's lunch hour does not mean that you can't take a setup. All right, because I know sometimes I've taken a trade during lunch hour and I've gotten a lot of questions asked in the premium chat like, hey, we shouldn't be trading this because it can get very slow. And it could, but that doesn't mean that it always will be slow. All right, it all depends on the volume. All right, guys, keep that in mind. All right, so obviously, if you look at the answer explanation, if the market remains clean and volatile, then yeah, you can always take it as long as you have all of your confirmations. All right, guys, keep that in mind. All right, let's go to the next one. All right, and yeah, most people ended up getting this one right, so props to you guys. All right, now let's go to the next one. Let's say, for example, you're in a trade after trimming at a 1-to-1 risk-reward ratio trade, and you just finished moving your stop loss over to break even. Now, let's say that price comes back into your break even, you get stopped out, and right after it runs into your levels of liquidity, which is going to be your price target. What should you do, or what is the lesson learned from this one, right? You should never move your stop loss to break even just because you had one bad experience. Is that the right thing to do in life? No, not even in trading, just in life in general. All right. Small wins add up. Always trust the process and obviously trust your system and always lock in profits no matter what, right? Obviously, if you have a 1-to-1 risk-reward ratio trade, just take it. You know what I mean? Remember, guys, no one has ever gone broke taking profits. Even if it's a small profits, they always add up. Or maybe next time, don't trim out a 1-to-1 risk-reward ratio trade and just wait for your price target to get hit. Or maybe just re-enter immediately even after the price target has been hit. All right, guys. What is a stop, bro? These questions, bro. But anyways, okay, guys. So yeah, mostly people ended up getting this one right, and I'm actually surprised, right? And the reason I'm gonna say I'm surprised is because, guys, there have been so many times where I've been in a trade, and we get stopped at a break even, or maybe you guys get stopped at a break even, right? And you guys are asking me like, "Oh, yo, should I re-enter?" No, bro. You already got your portion of the trade. Just be done with it. You know what I mean? If the trade went 1-to-1. You took trims and you took profits and you got stopped at a break even, that's it. You're done with the trade. Wait for the next one. There's no point in chasing the trade just because you got stopped at a break even. All right, guys, keep that in mind because I get asked this so many times. Do not chase the trade. You already got your portion of the trade pretty much done. All right, guys. So yeah. Let me see. Blastings for 80. Nah, it's not even like that, bro. It's just, some people really do wonder like, yo, maybe I should re-enter because I shouldn't have gotten stopped out of this trade. Keep in mind, bro. You already got your portion of the trade. If the market doesn't want you to continue going, then just don't take it. You know what I mean? Yeah, but you'd be surprised. You'd be surprised. Anyways, let's go over to the next question. All right, guys. Let me see. Okay. So let's say, for example, price is trending with a lot of volume towards this London high level of liquidity. And now, with the trend being bullish, we're currently 15 points away from this London high level of liquidity. Now, as we're going up, we just created a clean 50-point fair value gap candle, which is formed below the London high. Should you take the trade? All right. Now, there's a few. You guys really need to read this one. All right. So it depends, right? It depends how far the price retraces into the fair value gap. As long as it retraces plus the entry ends up being over 30 points away from the level of liquidity, you're good to go. Or no, you shouldn't take the trade because there's no room, for the 1-to-1 risk reward, right? So pretty much what this second answer means is, let's say, for example, right, the trade is 15 points away from the price target and you're risking 30 points. Is that a good risk reward trade? Absolutely not. You know what I mean? So yeah, let's see what we have here, guys. And I don't really have time to read the rest, so let's see. All right, let's see what you guys. Oh, actually, some people here. Okay, now I do understand why you guys are kind of saying no, or for the 14 people that said no. But guys, keep this in mind. All right, it varies. It depends. All right, that's why I made sure to put here. It depends how price retraces into the gap. All right, because guys, every gap is different. Sometimes we retrace into the bottom of the gap and we're like 50 points away from our price target when we were just 15 points away. All right, keep that in mind. So if we retrace more than 30 points away from the level of liquidity, which is our price target, then yes, you could take it. Guys, as long as your price target is 30 or more points, from the entry, you're good. If it's any less, then that means you're gonna have a negative risk reward ratio trade, meaning that you're gonna be risking 30 points to make like 15 to 20. That's not good. All right. So keep that in mind, guys. It varies. As long as you have 30 or more points as your price target, you're good to go. Keep that in mind. All right. Someone just said, just pick the longest answer. I used to do that in school, bro, and it always works. All right. Pattern recognition. It works, bro. It works. All right. Anyways, all right. Let's go here. All right. Now, let's say, for example, price sweeps the Asia low. It forms the MSS that's currently bullish, meaning that the market went from lower highs and lower lows into higher highs and higher lows. on the 5-minute time frame, and it just finished forming 2 valid 40-point fair value gaps after the MSS model. Then we retrace into the first fair value gap and we bounce 30 plus points. Should you have entered here, or should you have waited for price to go into the second fair value gap and then waited for the bounce? All right. So I'll let you guys answer this one. All right. But hopefully you guys are understanding what I'm trying to say, right? We had the DOL sweep, we got the MSS model, and we just finished creating 2 very bullish fair value gaps. We retrace into the first one. Should you enter off that one or wait for the second one to get retraced into, and then wait for that one to go ahead and obviously give you your entry? All right, let's see what we have here. All right, I'll give you guys about 10 more seconds, and I'll explain to you guys why the answer was correct, or whichever answer is correct. All right, guys. All right, let's see what we got here. All right. So if you go over to the correct answer, guys, the correct answer is you can take any entry off either of the 2 fair value gaps as long as you get your 30 plus point bounce. You could take the entry. It doesn't matter. It really doesn't matter. All right, guys. So yeah. Now, if we go over to view answer explanation, guys, you don't need to wait for the second fair value gap to get hit if the first one is already being respected. All right, with a proper 30 plus point bounce, you wait for the 30 plus point bounce, you enter, you place your stop loss at the bottom of the fair value gap where we bounce from, and we just take the trade just like that. All right, now if you go over to the second fair value gap and we get the same reaction, then yes, you can always get that second entry, but it doesn't matter which one gets hit. All right, guys, so keep that in mind. Keep that in mind. All right, now let's go to the next one. All right, let's say you notice price is trending strong, right, to the downside. Then taking out the level of wait, let me reread this. All right, so you notice price is trending to the downside, right? So it's a bearish trend, and then it takes out a level of liquidity and is now creating a bullish MSS after sweeping that level of liquidity. But the candles are rejecting the fair value gap and are going green, red with wicks everywhere. What does this tell you, guys? What does this tell you? Let me see. Someone here asked, with the previous question, 30 points, shouldn't it be 40 points? No, remember, when we're looking for a fair value gap, yes, it should be 40 points. But when we're looking for an entry, we're waiting for a retracement into the gap followed with a 30-point bounce. Because remember, we don't want to be risking any more than 30 to 35 points, right? So your entry should be about 30 points of an entry and of a stop loss. All right, so those are the 2 differences there. Keep that in mind. All right, keep that in mind. But anyways, with this question, let's see what we got here. All right, guys. I got you, Ronaldo. I got you, my man. I got you. All right. Anyways, all right, let's see what we got here. All right. So the question, guys, it was, let me kind of, I already read it for you guys. All right. But anyways, the correct answer here should be, this is known as chop. Obviously, guys, if the candles are going green, red with wicks everywhere and it's looking like a Christmas tree, guys, this is chop. You should always avoid a choppy market because obviously the probability behind this market is very low. You don't know where it's going to go because obviously it's not trending. It's just stuck in a range going up, down, up, down, up, down, up, down, up, down. All right, guys. So yeah, the second answer should always be the right answer. Just avoid the market. All right. And if you go ahead and look at the answer explanation, weak and indecisive candles inside of a fair value gap or just in general equals chop, which also equals skip the setup until the market looks cleaner and actually gives you volume and a trend to use. All right, guys. Keep that in mind. All right, guys. So yeah. Now most people, some people might have gotten it wrong here. Let me see what you guys chose here. Buyers aren't stepping in. Despite the chop, you think sellers are going to take. No, guys. I mean, remember, guys, we're not here to predict the market. We're trading what the market is giving us. All right. Just because we think that sellers are going to take control just because we're chopping, that's not the case, guys. All right. Because that's just not how you trade it. Remember, you're trading what the market is telling you. If the market isn't telling you anything, you just don't take a trade. Keep that in mind. All right, guys. Keep that in mind. All right. Let's go to the next question. All right. Now, what is the main difference between fair value gaps and I inverse fair value gaps? All right. Now, this one is a pretty simple one, right? A little break from the little bit more, longer questions, but this was pretty simple. All right, guys. So let's see what you guys have to kind of choose here. All right. Anyways, we have about 30 seconds left in this question. This one's pretty easy, so I'm not even gonna bother reading them. But yeah, whatever you guys think it is, just go ahead and answer it, and I'll go ahead and explain it completely. All right, guys. How much profit do you take at PT2? It depends. It depends. It's typically like what, maybe 2 or 3 contracts and all that good stuff. You know what I mean? Stuff like that. but it depends how much I'm holding. But yeah, all right, let's see what we got here. All right, so no one should have gotten this one wrong. Let me go and see what you guys chose. You know, maybe a few people got it wrong here, but guys, this one's super simple. All right, obviously the right answer is going to be a fair value gap forms a continuation model, and an inverse fair value gap is a reversal after you get the DOL sweep followed with the MSS model. Pretty simple, pretty simple. All right, so in a more detailed way, guys, you would use fair value gaps if price has a trend but hasn't hit any objective. That means that you're going to be trading into that objective. Now, in the other case, let's say that the trend is bullish, we created a bullish fair value gap, and we took out the level of liquidity above, right? What would you be doing in this case? You're going to be looking to inverse the fair value gap for a reversal model. All right, keep that in mind, guys. All right, so if you go over to the explanation, you guys will know exactly, all right, what I mean by that. All right, fair value gaps bounce on rejection before the level of liquidity has been hit. All right, so keep this in mind, guys. Regular fair value gaps, not inverse, but regular fair value gaps, these are made or pretty much used before a level of liquidity has been hit. Now, if a level of liquidity has been hit, you're going to look to inverse the fair value gaps just because we're getting the reversal model. All right, keep that in mind, guys. All right, I want you guys to be paying attention to these answers over here, or to these explanations. All right, now let's see what we got here. All right, on an FOMC day, the New York AM session has a perfect setup with the most perfect confirmations for a reversal setup. Should you take it? Now, this one, there's really no right or wrong behind this one. It all depends on your system, but I have my own system that I tell you guys exactly what I do. So kind of just base it off what I would do in this case. And don't be like, you know what I mean? I don't know what you would do. Guys, I explain this with every single FOMC day that we have. All right. So there's no, you know what I mean? Stuff like that. All right. So this was pretty easy. This is what I would tell you guys, what you guys would think that I would tell you guys. All right, guys. 50-50 on this one. No, I see what you're saying, but not really. Because if you're in Discord or just in general, if you follow my trading, I will always tell you guys what I would do on an FOMC day. All right, so keep that in mind. So this one shouldn't be so hard, but it could be a little bit tricky. All right, guys. So let's see what you guys would answer. All right. So yeah, let's see what we got here. But yeah. All right, so let's see. So if you go over to, and by the way, let's kind of catch up with the leaderboard. All right, so currently Dude, which won the other one. All right, wait, it kind of hit it over there. But we have some other winners as well. All right, but yeah, anyways, what is the correct answer with this one? Guys, no, you shouldn't take a trade on FOMC no matter what. All right, FOMC days, they're known to be unpredictable. Right now, let's say, for example, there will be times, obviously the market is very unpredictable, and there will be times where we have a beautiful setup on an FOMC day. Yes, you could take it, but you're kind of going against your rules because if the trade takes too long, the closer that we get to FOMC at 2 p.m. EST, the slower the trade could get. And the slower the trade can get, that means unpredictable moves in the market, and it can go into your stop loss. All right, so be careful with that. Me personally, in most cases, if not all cases, I just avoid FOMC and just come back another day. All right, guys, so keep that in mind. Keep that in mind. All right, and if we go over to the explanation, you guys see right here, FOMC days are notorious for fake outs and indecisive candles, which means chop. All right, and wild moves, obviously, as FOMC starts, which is also very unpredictable. All right, it's in most cases, it's kind of just best to set out entirely and just avoid just taking any setups. All right, but yeah, let's see. They don't listen. I tried telling them, bro. I tried telling them. All right, bro. But, you know what I mean? It's just not, sometimes people have to learn the hard way. All right? Anyways, let's go over to the next question. All right, guys? Now, let's say, for example, you find a beautiful, clean 45-point fair value gap projection, but ES is very, very choppy right now. What is the best thing to do in this case? Enter anyways, just because NQ just looks a little cleaner than ES. Wait and see what ES does to see if it aligns with NQ, or just take the trade with a smaller size, even though the setup is an A+. So we obviously know which is not going to be the right answer. All right, guys, but what do you guys think is the right thing to do here? All right, guys, remember, NQ is moving, but ES is just flat. What should you do in this case to have the best looking setup? All right, guys, let's see what you guys think. Let's see what you guys think. All right. All right, we have 13 seconds left. Let's see. Don't let the same people win again. It's not fair. They already won before, so let the new winners get a chance. It depends. It depends. And the reason I'm saying this is because it's new questions as well. But I'll see what you guys think. I'll see. But right now it's only one win. That's kind of the same thing. But I'll let you guys decide. I'll let you guys decide. All right. I agree. I'll let you guys know. All right. So yeah, if you guys think, if anything, I'll just give some dude 2 accounts, and I'll just give another winner 2 accounts as well. So maybe 4 winners. You know what I mean? I guess it'll be more fair like that. All right. So I do get what you're saying. All right, guys. But yeah, how many funded accounts am I giving for this quiz? I'm doing 2 accounts per winner. Right. So top 3 winners, 2 accounts. All right. Anyways, all right. Let's see the correct answer. So once again, you find a clean 45-point fair value gap projection, but ES is very, very choppy right now. What should you do? Well, guys, obviously, if NQ is moving a little bit, but ES is chopping, guys, the chop could catch up with NQ and kind of give you guys, kind of stop you guys out. So in most cases, guys, I would say just wait and see what ES does. And if it aligns with NQ, then yeah, take the trade. But if not, then maybe don't take the trade. All right, guys. But what I would do in this case, I've had some bad experiences, trying to take NQ when ES doesn't catch up, and I've gotten stopped out because of the chop. All right, guys. So I'll be very, very careful in these type of cases. All right. So yeah, keep this in mind. All right, guys. And if we go over to the answer explanation, guys, ES always provides a critical or very, very important confluence in the market. All right. You always need to make sure that ES and NQ are following each other. If ES is going up and NQ is going down, maybe don't take the trade until they both align with each other. Why? Because at one point, 1 second, one could look good, and the other second, it can catch up with the other one and stop you out. All right. So keep that in mind. Keep that in mind. All right. Now, this makes a trade of 50-50 chance because you don't know exactly what's going to happen with ES chopping up. It can chop up to the upside when NQ is trying to go down, and it can make NQ go back up. All right. Maybe ES is the leading index. All right. Making the setup on NQ kind of reverse and hit your stop loss. So keep that in mind. All right, guys. Now, let's go over to the next question. All right, guys. Now, price takes out the drawn liquidity to a downside and forms a bullish MSS model, and it creates a 42-point fair value gap on the 5-minute time frame. You notice that the fair value gap is sitting right below the Asia high. Should you take this setup? All right. The first answer is yes. A clean fair value gap and everything is confirmed to hit the Asia high. Right? Remember, the Asia high is kind of acting like a magnet. Or no, the fair value gap is too close to the level of liquidity above, and it will make your risk reward ratio lower than what it'll make your reward lower than what you're risking with this trade. Or yes, but only take it with a light size because the trade doesn't look like it has it's not a high probability trade. All right, what do you guys think is the right thing to do here? All right, I'll give you guys some time to kind of decide here. All right, guys. Yeah, reread the question if you guys have to. Just reread it. All right, guys. I don't want you guys getting this wrong because it's a simple one, right? But it does happen in the market. All right. All right. So the right answer in this question is actually a lot of mixed answers here. And I did see someone say in the chat, this question needs a little bit more detail, and I kind of do agree. I kind of rushed it a little bit, but pretty much what I'm trying to say is, guys, let's kind of go into our imagination here. All right. Let's imagine that, once again, price takes up the level of liquidity to a downside. It forms an MSS, the usual, and it's going back up. Right now, we're right below the Asia high drawn liquidity. It hasn't been taken out. The market trend is bullish, and we're going into it. But we're right above it. Right? Does this mean you should take the trade? No. Right? So if you go over to the correct answer, it's no, because the fair value gap is too close to the level of liquidity, meaning that your risk reward will be a lot less. All right, which will mean that, let's say, for example, you're going to be risking 30 points to be making 15 points into your price target, right? We don't want that. All right, so always make sure that there's a good amount of room in the trade between your entry and your take profit. All right, remember, your risk reward should always be positive. It should always be more. You should be risking 30 points and you should be making more than 30 points per trade. All right, at least for your first take profit. All right, so that's exactly what that answer means. So if you go over to the explanations, right, you guys will see here, right here. Right, if the fair value gap is right next to the level of liquidity, obviously there is no room for the trade to run into the price target. It's gonna go up a little bit, hit the price target, and just go back down. Right, you won't make as much money, or you're gonna be making less money than what you're risking. All right, this makes the risk reward behind the trade terrible. All right, remember, we want to risk little and win big. All right, not the other way around. It's always best to wait for a better looking setup to form if this is the case. Keep that in mind, guys. All right, let's go to the next one. All right. Oh, by the way, guys, this is the final question. All right. So let's see who wins here. All right. Now, let's say the New York AM trend is bullish with a clean structure. Clean structure meaning that the trend is higher highs, higher lows, very clean, very simple to read. All right. And price just finished breaking above the London high drawn liquidity and just inversed a bearish value gap, or yeah, inverse. Oh yeah. Okay. So let me kind of take a step back. Right. Price, obviously, it's bullish, higher highs, higher lows. and it just finished taking out a level of liquidity to the upside. Now, at the same time, as we broke above that London high, we just finished inversing another fair value gap to the upside. Should you take longs in this case, right? Obviously, I won't have enough time to really read all the questions, but let me know what you guys think. All right. Last minute comeback. We'll see, bro. Maybe you're LeBron or something, bro. But yeah. Remember, guys, what do you guys think is the right thing to do here? Remember, we took out a London high and we just inverse another fair value gap to the upside. Should you take longs? Yes or no, and why? All right, let's see what we have here, guys. All right. Now, the right answer behind this, right? Oh, I saw a lot of people make the comeback here. Wow. Okay. Anyways, so the correct answer behind this, guys, is no. The upside objective, which is going to be the London high drawn liquidity, has been taken out. You should not be looking for longs anymore because the objective already got hit. So in this case, you should be looking to trade downside. All right. Keep that in mind, guys. All right. So if you look at the answer explanation here, this one's a little bit long, but let me explain to you guys before I announce the winners. All right. Even though the trend was bullish and price inversed a bearish fair value gap above the drawn liquidity, the key liquidity target, which is going to be the London high, has already been swept, meaning that in sometime going forward, buyers are going to lose interest, meaning that sellers are going to gain that aggression and take the control in the market. All right. So taking a long position after a DOL sweep lowers the probability in a winning trade. Instead, just wait for the MSS model to form and then just take the shorts just like that. All right, guys. Now, let's kind of get to the leaderboard here. All right, guys. Now, I'm gonna kind of do a poll here. All right, because I know that one of you guys let me see. So wait, let me take a screenshot here. There you go. Okay. So these are the top 3 winners. Now, I don't know if I should give out another I don't know if I should give out another I can't read their names here. I think I have to like view a report or something. Okay, right here. Okay, let me see. How do I check out the leaderboard? Should I just do it like this? Because the top 3 winners was Zumdude, Soul Hub, and Consistent 3789. Those are the winners. Do these more? I will, bro. I will. But yeah, I might give. Okay, so since Zumdude won the last one, I might give him 2 accounts and then just give the guy in 4th place 2 accounts as well, right? Give 4 and 5 1. That's reasonable. That's reasonable. Because Zumdude did win it fair and square, to be fair. Okay, yeah. So how do I find the actual leaderboard? Because Zumdude should be on here number 1, right? I mean, oh, it's not like in order. Wait, how do I organize this? Is it first? Oh, accuracy right here. Points right here. Wait, no. Let me see. Best. Yeah, it's not really like showing me anything. Oh, score right here. There you go. Okay, so yeah. So I'll give how do you say that name? UG Ticked and Xavier Long 1 accounts as well. So let me kind of write down your name. Okay, so the winners behind this one, guys, is Zumdude. Wait, let me turn off streamer mode real quick. Give me 1 second, guys. Give me 1 sec. Okay, so Zumdude, Soul Hub. Okay, yeah, he's in. Wait, Soul Hub, you're not in the Discord. Guys, once again, if you guys are winning this, make sure you guys are joining the Discord so I can get you guys' names, all right? So I can DM you guys. So Soul Hub, which you're not in the Discord yet, but I'll write it down just in case I miss it. Soul Hub. Then we have Consistent 37. Oh, yep, you're in the Discord. I'm gonna give an account to UG Ticked. Are you in the Discord? Nope, UG Ticked, you're not in the Discord. Make sure you guys click the link in the in the Discord. All right, guys. UG Ticked. I'm gonna write it down just in case. And Xavier Long. Yep, you're not in the Discord either. All right, so about 3 of these winners, guys, you guys have to join the Discord so I can give you guys the accounts. Keep that in mind. All right, guys. Let's try looking for Soul 0. This one 0211. Let me know in the chat. All right. But anyways, guys, I'm not really seeing it. So I'm assuming it's this one, right? I'm in the Discord. UG ticked. Let me see. UG ticked. Oh, there we go. All right, I see you. Xavier Long. All right, let me go ahead and put you here. And then Soul, you're the only one that's missing for the. If anything, Soul, just type in the trading chat and I'll grab your Discord from there. Soul Hub. Yeah, no, you're not here, bro. Just type in the trading chat. Type in the trading chat. But guys, these are the winnies. These are the winners. All right. So yeah. Now, before we get off, guys, once again, if you guys want to start getting ready for tomorrow, guys, and for the winners, guys, and everything, if you guys want to be stacking up on Apex to get the 80% off, guys, it's called Blasters. It is gonna be on the screen up here, guys. So you guys, oh, there you go, Soul. So it's gonna be Soul Hub. There you go. So you just joined the Discord, I'm assuming. So Soul Hub. Yeah, there you go. Okay, now you're in it. All right, so these are the winners. So the top. Okay, so Zumdude will win 2 accounts. Sohab will win 2 accounts. Consistent will win 2 accounts. UG will win 1 account, and Xavier will win 1 account. All right, so you guys in here. Oh, and yeah, obviously Sergio, I got you. Don't worry. You're gonna be winning 1 account with good day to trade and all that good stuff. All right. Yeah. I got them to as well. So I got the winners. The winners for the 1 account here, and the winners for the 2 accounts here. All right, guys. Well, 2 2. Wait. 2 2 2 1 1. All right. So yeah, I'm gonna go ahead and send the money right now, so you guys can obviously see it on stream. So guys, if you guys went ahead and won the accounts, DM me your Cash App, PayPal, Zelle, whatever it is, and I got you guys with the money. All right, I'm gonna go ahead and send it right now, so you guys can go ahead and make some money. All right. So yeah, let me know. So in the meantime, oh, and by the way, yeah, I said if you guys want to go ahead and stack up on some Apex accounts with 80% off, guys, let me go ahead and send the link right here, guys. It is with code Blastoise. It'll apply 80% off any funded account on Apex. All right, guys. So you guys can go ahead and take advantage of that. All right, let me go ahead and send it real quick, just like this. There's the account, and guys, code Blastoise. That's BLASTOISE. Will give you 80% off any funded account on Apex. All right, guys. Anyways, let me go ahead and start sending the money over, guys. For the winners, DM me your. Oh yeah, okay. So Sergio, and that's 1 account. You won 1 account, so that's gonna be on Cash App. So $34. Okay, bet. So 34. Pay to. Let me not leak your name because I have a history of doing that. So it's MN. Oh, I was it. Oops, bro. Okay. Let me see. All right. So yeah, Sergio. I'm gonna say your last name. Let me not do that. Confirm. 34. Pay. All right, guys. Wait. Funding account giveaway. All right. So guys, first winner paid. Oh wait. You can't receive money with this, bro. You gotta set up your Cash App, bro. Look, guys, hold up. Let me kind of change the stream here. Sergio, for you, bro, you gotta fix it up. I don't know if it focuses. It says here your payment couldn't be sent. You can't send and receive money with this person. Maybe you have to set something up, but just DM me and I'll fix it for you. Or whenever you fix it, I'll go ahead and send it. All right, let's do good day to trade real quick. Give me 1 second, real quick. I'm gonna scan the QR code. All right, there we go. All right, 34. Wait, good day to trade. You won 1 account, right? I already forgot the list. Hold up, guys. Yeah. Yeah, good day to trade, 1 account. So $34, funded account giveaway winner. Pay. All right, guys. Second win. Wait. Send anyway. All right. There's a payment sent for one of the winners. Wait, sending. There you go. All right, here's proof as always. Hold up. Let me kind of move my mic here. Wait, does it track it? Hold up. Dude, my camera's focused on my face, bro. Hold up. You guys get the point. It's pretty much. But it actually won't focus. Bro. Anyways, I sent the money. All right, $34 sent to Diego, which is good day to trade. Let's go over to the next winner. All right, the next winner was Zumdude, so I'll be sending you $68. All right, since you won 2 of the quizzes. So let's send Zumdude 68 bones. All right, $68 sent to Zumdude. Wait, let me send it real quick. All right, sent. Here it is. Proof as always. Wait, let me hold up. I'm gonna stand up so the camera can focus on. Bro, it actually won't focus. There we go. $68 sent to the second winner. All right, let's do the third winner. So, oh, Xavier Long. Oh, Zell. All right, let me go over to Chase real quick. Give me 1 second. Pay some Zell. All right, scan QR code. All right, I got you. So, wait. So yeah, Xavier won. Oh yeah, one account. So you're in top 5 on the thing. So you're winning 34. So what is this for? Funded account giveaway. I'm giving away winner. So $34. Let me make sure I don't link your information because I've done it before and it's not. All right. Sign now. All right. Third winner paid out. Let me block your number real quick just in case. Make sure everything is good. Hold up. There we go. Here it is. I can't really show it because hold up. Make sure I block everything. Okay, here. Hold up. There you go. Money sent to Xavier, guys. All right. Let's pay out the other winner. All right. Just so you guys know that we're actually doing this. All right. UG ticked. One account. Zell. Okay. Let me not leak that real quick. Give me 1 sec. So UG, you won one account. One account. So let's go over to add. UG. 9652. Oh, I almost leaked your number, bro. Dude, guys, I have such a bad habit, bro. Okay, so you won 34. So funded account winner. All right, let's go on and send it over. All right, next person paid out. Let me kind of block your number here. Here you go. UG paid out, guys. Another funded account done. All right, the only person that we're missing is I paid Dude. I paid Sergio. I haven't paid because he has to set up his Cash App. Oh, consistent. Wait, consistent. You won? Oh yeah, you did. Oh yeah, top 3. So I sent you $68. All right, so it's Cash App. All right, wait, consistent. I put you on the list. I see you here. All right, Dude, Soul Hub, and consistent. Yeah, consistent. All right, bet. Let me go and send you the money. 68. Wait. Let me make sure. Oh yeah, True the name. All right, bet. All right, give me 1 second. $68. Note. Paste. Winner. Pay. All right, another guy paid. Hold up. Send anyways. Give me 1 second, guys. All right, here it is. Another winner paid out. There it is, $68 for top 3. Now we got to pay out Soul Hub, which is the final guy. Soul Hub. Okay, let's see. If you can't do Apple Pay, my Cash App is. All right, let me send you to Cash App. So you won 2 accounts. So $68, 34 plus 34. Yep, how much is 68? Pay to BRY. All right, found it. All right, my man, I'm gonna send you the money right now. $68 notes. Winner. All right, there we go. Wait, send. All right, all the winners paid out. I'm gonna take care of Sergio right now because he has to do the thing. All right, there we go. Final giveaway winner paid out. Wait, hold up. Can it focus? There we go. There's the proof as always, guys. $68 for 2 funded accounts, guys. 2 funded accounts. All right. So yeah, hopefully you guys were able to enjoy the stream. Guys, I'm going to be doing this a lot more often. I really want to encourage you guys to obviously learn my strategy and obviously become profitable so you guys can be securing payouts. And guys, once again, for my winners in here or for the people, for everyone in general, guys, if you guys are interested in obviously getting access to the 80% off any funded account, guys, it's called Blastoise. It is on the screen above. If you use that code, it will give you 80% off any funded account. All right, guys. But once again, for the winners in here, just so you guys can confirm and everything, if you guys want to type it up in the chat or in the Discord that you guys received the money, for proof as always, You know what I mean? All that good stuff. All right, guys. But hopefully you guys were able to enjoy the stream. Once again, if you guys do want to get access to 80% off any funded account, guys, let me go ahead and send it over once again. Right over here. Here you go, guys. There you go. All right. So click that link that I sent over in the YouTube chat. Code Blasters will get you 80% off any funded account. This is for my giveaway winners or just for any viewers in general. All right, guys. But yeah, let me see. He sent me, he's legit. Much love, bro. Much love. All right, my man. But yeah, hopefully you guys were able to enjoy the stream real quick. Let me kind of open up my OBS here. But yeah, hopefully you guys were able to enjoy the stream. Hopefully you guys had a bunch of fun with the questions. I don't know if it was easy. I don't know if it was complicated, but I'll do it again sometime soon. Maybe next weekend, maybe next weekend. Who knows? Who knows? All right. But yeah, anyways, I'm going to go ahead and end the stream, and I'm going to get to preparing for the live trading tomorrow. All right, guys. So yeah, I'll be back on stream tomorrow, live trading as per usual, and we'll make some money next week. All right, baby. So yeah, let's get it. But yeah, I'll see you guys tomorrow at 9:40 a.m. EST. I'll see you guys then. All right, get some good rest, and let's get to making some money tomorrow. All right, guys. Peace out. Enjoy your days. Enjoy your weekends. And be ready for tomorrow. All right, guys. Peace out, guys. Peace.